Hey guys, welcome to another episode of VetFolio Voice. This episode, sponsored by First Financial Bank, is all about SBA loans and the importance of working with a lender you trust to develop the right financial plan for your business. Joining me was someone I've been lucky enough to speak to many times before and who always teaches me so much, Dr. Schwanda Flowers. Dr. Flowers and I agreed that this topic was a little bit of a heavy lift, diving into SBA loans and some of the recent changes that have been implemented around SBA loans. So if you listen to this episode and you enjoy it, I highly encourage you to head over to the VetFolio website and find our other talks where we talk about lending, how to be prepared for maybe a purchase or an expansion, and what to expect throughout the process. I know that for me, having the opportunity to talk to Dr. Flowers over the last several years has really expanded my knowledge and understanding of practice loans and practice financing, so I'm thrilled that we can bring you another episode. Dr. Schwanda Flowers has been an innovative member of the community for the past 20 years. As a former independent pharmacy owner, she understands what it takes to be a successful owner and entrepreneur. Her expertise led her to academia, where she's been leading the way for the last 14 years, focusing on entrepreneurship, ownership, business planning, leadership, and professional development. Recognizing that a passion for ownership and personal relationships are key to small business success, Schwanda uses her vast experience in ownership and business planning to support business owners in accomplishing their goal of ownership or expansion of their business. At home, she and her husband enjoy traveling, playing golf, spending time on the water, or skiing in Colorado with their 5 children. All right, let's go ahead and get into this episode. We are live here at VMX recording with the wonderful Dr. Schwanda Flowers from First Financial Bank. And we've spoken many times in the past about different financial topics, and it's always been really empowering. So if anybody is listening and really enjoys this talk, definitely go check out those talks because there's a lot of great information that I feel like sometimes what seems like a very complicated topic and is a very complicated topic that you have done just a wonderful job of breaking it down and making it very understandable. So thank you.
Thank you for having me.
Of course. All right, so today we're going to talk about SBA loans. So when we talk about SBA loans, that's in comparison to what? What type of loans are out there?
So there's multiple different options for financing. So when you're a veterinarian thinking about acquiring a practice, starting up, there are multiple different avenues for financing. So there's obviously conventional loans, so a typical direct loan from a bank, a lender. There's also where you can get private investors, angel investors. So there's ways to do that with investors into your business as well. And then there are also SBA loans. So we get lots of questions about SBA loans, and it's a really good option for veterinarians to consider.
Okay, and SBA loans, let's break that down a little further because I think, conventional loans, that makes a lot of sense. Angel investors, although I would not know how to go about that, the concept makes sense. So SBA loans, what exactly is an SBA loan, and are there different types of SBA loans out there?
Yeah, so SBA loans are government guaranteed loans.
Okay.
So these are specifically for small businesses. The SBA lays out very direct guidelines about what qualifies as a small business, based on the revenues of certain businesses. So each industry will have a code.
Okay.
And so that is laid out very clearly by the SBA to be sure that it qualifies as a small business and that the money is going to small businesses truly.
Sure.
But they're government guaranteed loans. There's a couple of different types. The two probably most popular that people may have heard of are going to be a 7A loan or a 504 loan. And the difference is typically a 504 loan may be used for real estate or construction, maybe more than it would just to acquire a practice. But both are good options, and certainly the important point is that you consider all your options. So whether that's conventional, whether that's SBA or some other form of financing, we always want veterinarians to make a good decision for their business.
Sure.
And so there are lots of options out there. And what we don't want are people to think that there aren't that many options, because there really are great options to fit, whatever that need might be.
Is there a reason why someone would choose one type of SBA loan over another? Or is that very just individual based on the circumstances?
Yeah, probably individual based on the circumstances. For a lot of acquisitions, we have SBA 7A loans, which seems to be a very popular product. And what that allows for is a 10% down payment. So if you're going to acquire a practice, you can acquire that practice with a 10% down payment. Other loans may require 20% or larger down payments. But it is variable. And so that's one of the questions that you should ask as you're talking to a lender and your other advisors, what would the down payment requirement be? Because often that is a barrier to entry for many associate veterinarians.
Especially for acquisition.
That's right, especially for acquisition. So the price tags can get large. I mean, when we're looking at successful practices, and that can be overwhelming. I mean, if you're thinking about a $200,000 dollar down payment, that can be a bit overwhelming, I think, for all of us. And so you have to either plan for that very well, or there are some other options with some recent changes with SBA. And so one of the changes recently in the new regulations is that a seller can actually carry or hold back that down payment for a buyer.
Okay.
And so in the past, SBA required that seller note. So that's it's a whole different kind of loan with the seller, essentially. They would have to hold that for the life of the loan. So 10 years. Well, if we put on our seller hat, sometimes we don't want to wait 10 years, for our money.
Absolutely.
And so that was, somewhat difficult for some sellers. And so recently there's been a change where a seller can do that and only have to hold that note for 2 years.
Okay.
So it's on standby for 2 years. So the borrower would not start to pay back the seller for 24 months. And then after that, they could begin paying back that seller note.
I see.
Much more palatable,
Yes.
Oftentimes for a seller. So that's become a really great option. And that's one of the newest changes with SBA.
So making it a little bit more accessible for some of these big price tags.
That's right. That's right.
I want to touch on what you said about this being a government guaranteed loan.
Yeah.
Is this a federal loan that we're getting?
Right. So that really is, there's a lot of misconceptions around what that is. So the SBA does provide direct monies, from the government to small businesses. Those are usually in the form of those relief loans, right? So,
Sure.
The disaster relief loans. And so during COVID, there was a lot of that available and much needed, actual government dollars, right?
Like the paycheck.
PPP loans,
right.
Different things. So a lot of those, some of those were coming directly from the government, especially those disaster relief loans.
Sure.
But an SBA loan for small business is not coming straight from the government. That is money that is borrowed from the bank.
Okay.
But the bank then is using the SBA program to guarantee those funds. So depending on the amount of the loan, it could be a 75% guarantee, it could be an 85% guarantee. It does vary based on different programs, but essentially what that does for the bank is it allows us to lend money to these small businesses, and if something were to happen, and we followed all the rules,
Right.
Then we are guaranteed that the government would pay us back that money to a certain portion.
So much more palatable for the bank as well to work with these smaller businesses.
Yeah, and so when you think about businesses, it might be a little more, maybe a little riskier.
Yeah.
Maybe there's not a lot of collateral involved with them. That's where SBA can play a huge role in allowing those owners to enter into small business ownership. And then it allows the bank to have a little bit more security, you know, in that lending. So that's the way it works. It is money from your bank,
Sure.
but it is being guaranteed by the government.
Right. Absolutely. That makes sense. See, this is why I love talking to you, because it seems like I'm like government guaranteed and SBA and all these concepts, all these different concepts. And I feel like when you break them down, I'm like, oh, I get it. It makes so much sense now. So thank you for that.
Absolutely.
So I understand there's been some recent changes with SBA loans. You mentioned the seller notes. What other changes are out there? Are there any in particular you feel like we as veterinarians should be aware of?
Yeah, so I think that the seller note change is a huge change, and there were changes to the SBA regulations that came out this fall.
Okay.
So what we're talking about today is obviously based on the most recent changes. They could at any time change these again. So
Sure.
definitely want to put that out there for listeners. But right now, what we know is that the seller note has changed, right? So there's opportunities there to get into a practice, potentially, and not have to have that down payment requirement, and do that through a seller note. There's also been some changes when we think about term lengths of loans. Okay, so
Yeah.
a typical business, SBA business loan, if you're acquiring business assets, is 10 years.
Right.
Okay, and so if real estate is involved, it can go out to 25 years. And so in the past, we were able to do a blended term, which
Okay.
meant we would look at the ratio of what was the practice worth,
Mm-hmm.
what is the real estate worth, and then we would do a blended term based on that.
Somewhere between 10 and 25
10
years.
and 25.
Okay.
That regulation has changed. And now if the business is more than 51%, so what you want now in order to get that 25-year term, the real estate has to be worth more than the business.
Okay.
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 So if the real estate is worth 51% of that project, then we're able to do 25 years.
Okay.
Anything less than that, it's still going to be 10 years.
Sure.
Yeah.
And with that in mind, the changes with real estate, where, I'm judging by your response here that probably that doesn't happen very often, that you get that 25-year where the real estate's worth more.
Yeah, it really depends on where you are in the country, to be
Sure.
honest. I think that there are certain parts of the country that, the real estate, the prices have not gone up like they have in other parts of the
Sure.
country. But there are plenty of places where the real estate is quite often very valuable.
Okay.
And so, that really does provide an opportunity for new business owners to be able to make that work from a cash flow perspective if the term is out to 25 years. But otherwise, you've got to work some math, and really you've got to think about each individual situation and does it make sense? Does it make sense to purchase the real estate along with the practice, or should I wait and do that later? And really evaluate the scenario and work with, your advisors, your lenders, your accountant, whoever that is, to do the math. I mean,
Right.
you should at least explore all the options and see what that looks like.
And that was going to kind of be my next question of if there are a lot of 10-year loans out there, say it's the business is worth 51% or more. Do you see that as a barrier to getting these loans, or is it kind of situational? I mean, is it still realistic to say, okay, a lot of these, and as you've mentioned, it can vary from region to region, but if we are limited to a 10-year term, is that one of those where we take on a case-by-case basis? Do you see that being a barrier to getting these loans?
No, I don't think so. I think because very often, the business assets is what people are wanting to acquire anyway.
Right.
And so, quite often it might make sense to purchase the real estate, and lots of times it doesn't. And there are lots of sellers who want to hold on to their real estate. So,
Yeah.
if there, those out there that are listening that own a practice and own the real estate, sometimes they wanted to hold on to that because then that provides some passive income,
Absolutely.
right? And so really it's very dependent on each deal.
That makes sense.
Yeah.
But not to let that scare anybody away
No,
of like,
not
it's
at
going to be
all.
10 years.
Yeah,
and
not at all.
Sure,
Not at all.
sure. What about guarantee fee changes?
Yeah, so those have changed kind of periodically over the last year. I mean, and they do change. And I think that SBA does try to monitor that and really see, they want the best, I think, for small business owners always, and it can be a complicated process. And there is some paperwork. And so you want to have a trusted person who does that all the time, walking you through that
Okay.
to make it as easy as possible.
Yes.
That's our job,
Right.
is to make that easy for you. You shouldn't have to understand all of those things. But when we think about the guarantee fee, that was one of the things that really, when you weighed an SBA loan versus a conventional loan, you might have this additional SBA fee. And the reason for that fee is because they are guaranteeing that loan,
Got it.
right? So there's a fee associated with that. But recently the change is that if the loan is less than $1 million, so $1 million or less, there's no guarantee fee.
Oh,
And so that is really a huge umbrella for
Yeah.
a lot of acquisitions. And so that wouldn't be a barrier any longer to worry about needing to pay an additional fee in your closing costs or, bank fees.
Right,
And,
right.
and so every penny counts.
Yes.
So that certainly helps, but there's no fee associated with those loans right now.
Yeah, I could see that taking away a huge
Yeah, that
barrier to
guarantee fee.
entry.
Yeah.
A couple of things that you said. One, when you said these products that are out there, I've heard of these loans being referred to as products before, which is always hard for me to wrap my head around as a veterinarian. And then what you said just there about it's not, we don't expect you to understand everything. That's whoever you're working with, that's their job. I think that really illustrates the importance of working with someone who you can trust and who knows what they're recommending, and having someone where you can feel comfortable asking these questions.
Yeah, that's right. I think that one of the most important things to remember is you were the expert practitioner, and now we're asking you to be this expert business person, and that feels somewhat overwhelming quite often. And my background, so I'm a pharmacist, pharmacy owner, and now a lender, and so I understand how that feels to come into ownership and really feeling like, okay, I'm not a business person, I don't have a business degree, and do I understand how to do this? Can I be successful? And absolutely you can be. But what we want you to do is educate yourself well enough to be able to ask those questions.
Right.
And to know then who you can trust. And I tell people all the time, when you have lenders or other kind of key stakeholders and people in the industry like accountants or attorneys or people like that, you want those people who are willing to answer every question.
Yep.
We should be a resource to those veterinarians to help them walk through that process and educate them about their choices.
Right.
Because especially for lenders, at the end of the day, if you are not successful and you can't pay me back,
Yeah,
I'm not going to be
sure.
successful, right? So, but certainly we want to set you up for success. We want you to feel confident in your decisions.
Mm-hmm.
You need to make good business decisions, even as a practitioner, and it can be a little overwhelming. And so having somebody that you feel comfortable asking questions is really important.
Yes, because like you said, we're trying to set everybody up for success
That's
here,
right.
but that comfort level and being able to say, but what about this? And
Mhm.
ask those small questions
Yes.
that we
Yeah.
don't understand.
Yep, that should be a comfortable space that you're
Yes.
able to do that always.
We've talked a little bit about acquisitions and real estate and things along those lines. Let's dive into expansions for a moment. I understand that there have been some changes around expansion. So if you can expand on the expansion changes.
I think we had quite a bit of a conversation one time, I know, on expansions. And one of the huge benefits with expansions when you think about an SBA loan is that we can use equity in your business instead of a down payment.
Okay.
So if you wanted to buy the real estate or build a building or buy a second location, whatever that looks like for your business, go from a mobile practice to brick and mortar.
Sure.
Whatever that looks like for your specific small business, with an expansion loan, you can do that without having to put cash down. Okay.
Sure.
In some cases, in many cases. So, but SBA allows you to do that, and we can look at the equity that's in your current business, and we can use that in lieu of a down payment. Okay. So that would relieve kind of that barrier to entry where, you're not going to use all of your capital, all of your cash on hand in order to expand your business. And so that's a great option. But one of the things that has changed is, we had a lot of practitioners and veterinarians and other, small business owners asking about expansion loans and maybe going from one part of the country to another, or I have a practice in Texas and maybe I want to buy one in California. And so really now the SBA and the new regulations has said it needs to be in the same geographic region.
Okay.
And so the spirit of that, in my opinion, the spirit of that is just that, they want you to sort of be in the same proximity. That doesn't mean you have to be in the same city, and maybe sometimes even in the same state, depending on where you are in the state,
Sure,
right?
yeah.
But what makes sense regionally for that to be an expansion? But it really, I think, to me, then that rule says, we intend for this to be somebody buying another, practice or
Right.
opening a second location, really continuing to serve that geographic region or that community around you. And so the ownership needs to be the same.
Okay.
So if you have a practice and you say you wanted to expand and now I'm going to be your partner,
Right.
that doesn't work. So the
Okay.
ownership needs to be the same. you need to be in the same geographic region, and you need to be in the same business. So
Okay.
we also couldn't go open a restaurant and
Sure.
and call it an expansion.
Yes.
So, yeah.
Where is your expertise in this,
Right,
veterinarians?
right. And so there are some rules around that, but definitely if somebody is interested in expansions, ask those questions. You know,
Yeah.
what are the benefits of doing that through SBA versus other types, you know, of loans that are out there, because it's certainly worth exploring.
Sure. And that gave me a couple of other questions. One, you mentioned buying the real estate. Would buying the real estate for your existing practice that you own count as an expansion?
It would.
Okay.
Yes. Yeah.
All right.
Absolutely.
And then you also mentioned partnership. I could see if you said, well, I'm going to open a second location and I want to work with someone,
Mhm.
is there like a percentage there, or it just has to be 100% the same?
It would have to be the same ownership for it
Okay.
to be an expansion. Now, that doesn't prevent you from doing it,
Sure.
but you would have your same down payment requirement
Got
as
it.
a different acquisition. And we do get a lot of questions about partnerships.
Yeah.
And how can we do that, or partial buy-ins.
Yeah.
And so there are ways to do that now through SBA. So if you're only going to buy into 30% of the business, or 50% of the business, there are some great ways to do that now with SBA, and they do look a little bit different than they used to. And so again, ask those questions. Don't be afraid to really feel out all of your options, to be sure, we're all type A, I think.
Yes.
When I think about pharmacists and veterinarians,
Yes.
yeah. So we're going to make our list and ask all of our questions and do all of those things. And really, that's what you need to do to make a great decision. But don't be afraid to ask and just explore all those options.
Sure. And I think you make a really good point of, just because this specific setup won't work for you, it doesn't mean there's not another one. So like
That's
you
right.
said, ask the question, say, this is what I want to do. What's the best way to go about this? And make sure you have a comfortable space to ask those questions and get the answers that you feel comfortable with.
Yep, that's exactly right. If you're not comfortable, ask somebody else the question.
Right.
Yeah.
Right.
Yeah.
I mean, just like in any profession.
Yeah, that's right.
Yeah.
Absolutely.
So we've talked a lot about how there have been these changes recently around SBA loans. And I know you talked about, kind of your opinion of the spirit behind some of them, but can you talk about some of the reasons SBA loans and rules and regulations around that might change, and maybe why they have changed recently?
Yeah, I wish I had all those answers.
Sure, I wish you did too, but that's
I knew why.
But we won't hold you to it.
Yeah. So I wish I knew why, but I do think at the end of the day, when I take a step back and think about all of the changes that are made, I know that there's a ton of work that goes into that, and sometimes it might seem cumbersome,
Right.
from the consumer perspective. I totally understand that. However, what we see are really changes that are made to continue to encourage small business ownership,
Sure.
and that the money is going to the right people. And so, I think that that's very important. And there were some barriers to entry in multiple different professions. Obviously these regulations are not just for veterinary
Sure, yeah.
medicine, so they're for all SBA loans. But, one of those barriers to entry, for example, when we talked about the down payment, quite often that was really difficult for people to enter into small business ownership because of the down payment requirement.
Mm-hmm.
And so really they've thought about that and what does that look like, and how could, I honestly think that it's a great benefit now that's available with the seller note.
Yeah.
And being able to do that on a shorter term, it's good for the seller and the buyer.
Absolutely.
Which, obviously that perpetuates the health of our small businesses.
Right.
And so at the end of the day, I really think that, they're trying to be sure that small business is successful, sustainable, and that we're not discouraging
Right.
people in every industry from entering into ownership. It's scary enough as it is,
Yeah.
right?
Yes,
and a little
absolutely.
intimidating. And so, everything that we can do to remove some of those barriers. I honestly think that is the spirit behind it, is really trying to just encourage small business ownership.
That's fantastic to know that, there's
Yeah.
there's forces and agencies out there really trying to encourage and make it and remove those barriers, because just the idea of it itself can be enough of a barrier. And once you get over the, accepting, okay, I'm going to take this plunge, I'm going to do this, as many barriers to entry as we can remove. Of course, as veterinarians, and I'm sure it's not exclusively veterinarians, we want to pay back our loans. We want things to succeed. We want to do a good job. And so to be given the opportunity to do that is really encouraging.
Yeah. That's right. I mean, the number one mistake, in my opinion, that many associates make is just that they're afraid they'll fail.
Yes.
And that fear is real.
Yeah.
And so, obviously you need to do your homework. You need to be prepared. You need to prepare yourself personally, personal financially. And then you need to be sure that you've done your research and you're understanding, what to look for in a business and how to make that business decision. But honestly, walking through that process, what we find is veterinarians are very successful and they do pay back their loans, and so we love that we're involved in the industry, and very supportive of this profession and how can we help independent veterinary practitioners grow and own.
I know I've been very encouraged by a lot of our conversations to say, I can wrap my head around these concepts.
Yeah. Oh, absolutely. If you made it through vet school, you can absolutely own your own business and be successful. Yes.
Yes, we need to keep repeating that until we believe it.
Absolutely.
I just want to clarify on the seller notes real quick for my own knowledge so I can understand. So if I'm understanding correctly, the seller, when you say the seller could carry that down payment amount, but they wouldn't be able to collect on it for 10 years. So essentially a veterinarian would buy this practice and the seller would carry that portion for 10 years. And then after 10 years, the veterinarian has paid off the business loan and is now having to pay back the seller. Is that right?
Yes. So that was historically the length of time that was required.
Right.
So the new change is that now the seller only has to wait 2 years to start repayment. There's actually a way to start payments a little bit earlier too, but it does get a little complicated. But I think the point is that before the recent changes this year, a seller would really have to, so let's say you needed $100,000 for your down payment. Okay. And so before there was a limit on how much the seller could carry. They could carry half of it. Okay. So you come up with 50. They then hold 50 on a seller note, and then they would have to wait until you paid your loan off before you could pay them. Okay.
Right.
So your SBA loan would need to be paid before then you could pay the seller.
I feel like that creates this like black cloud over your head of like, I paid it back and now I have to pay this other one.
Yeah. And I also think, a lot of sellers, if you have sellers, if you think about the age of many sellers, I want my money. I'm retiring.
I don't blame them.
Yeah. I want to live my life and enjoy retirement. I don't want to wait that long, for that portion to be paid back. So that change now allows that the seller can do 100% of that.
Right.
And only has to wait 2 years on full standby.
And have you seen that become a problem where, we have a veterinarian who's trying to pay back a business loan and now is paying on a seller note?
That's a great question. Great question.
I figured it would be like a universal answer of like, it depends.
Well, it does depend. And so, but one of the jobs that we have is to be sure that when you do start paying that seller note back, so we're going to look at historical financials. We're going to look at how, what does that seller note look like?
Sure.
It can't be a balloon payment where they expect you to pay it all back at one time. So we are going to be sure that it doesn't put that new owner in a situation where they cannot service both loans.
Right.
And so that's a job as a lender to be sure that, when we look at those purchase agreements and we look at the cash flow of the business, that you are setting yourself up for success and that exact scenario does not happen.
And again, I think you just re-emphasize that, like working with someone you trust, working with someone you're comfortable with, who you feel good is going to put you in a position where you can handle those financial impacts that are going to come your way.
That's right. Yeah. And also thinking about all the changes that happen all the time.
Right.
And so you do want that person who you can trust to say, okay, now there's this recent change, or let's talk about this, or we're going to figure this out. And because it is complicated. I mean, there's a lot that goes into it. And so you want to have those people that you can rely on and ask questions. And I probably told multiple people today, I'm going to email that to my team of underwriters, and we're going to get a good answer for you. So, I mean, that's what you need. I mean, it's a team effort for sure.
Exactly, and having your lender as a member of your team, not just they give me the loan and that's the end of it, but no, this is a team member who you're going to continue to consult with and make sure that you are set up for success financially.
Yes, from the very first conversation, and it's never too early to start those conversations and start asking those questions. And so that relationship could begin very early, maybe even before you found a practice you want to acquire.
Right.
And start that relationship so that you really understand, and then it should continue until that loan is paid off.
Sure. Absolutely. Yeah. I think we've probably covered a lot of this, but just as kind of we wrap up here, why do you think it's so important that we as veterinarians really have a handle on some of these changes and we understand some of these regulations? I mean, of course, we're talking about having a lender who we can trust and is a team member, but why is it important that we also have at least some understanding of what we're doing, what we're getting into?
Yeah, I think that that's probably one of the biggest issues that we find with any sort of a practitioner, because we want to practice and we want to take care of patients, whether
Yes.
that's human or animal. And when we think about the business side of it, sometimes that can get left behind.
Yeah.
And we're really, we're working in our business, we're not working on the business.
Right.
And so it's really important as you enter into ownership that you understand that. Now, you should have people doing your taxes and you should have great attorneys drawing everything
Right.
up, right? But at the end of the day, you need to understand that. I mean, you need to understand what's going on
Right.
with your business. You need to understand what your financials mean and what they look like. How healthy is your business?
Right.
Or, what are decisions that need to be made? Did my business plan look like? Did I write a business plan? I mean,
Right.
so you just really, it puts you in a position to be more successful if you're not relying on everybody else to sort of tell you what to do, but
Yeah.
you actually have an opinion about how should this look and what do I need to do? And hold on, I read this, or,
Right.
I know that this is happening. I mean, it really puts you in more of control of your own destiny and your own success.
Mhm.
And that empowerment is what's so important as a business owner.
I think that makes a lot of sense. And if you're working with people you trust, your accountant, your attorneys, your lender, then being empowered to come up with those important questions, those good questions, and then you can take them to these team members who you trust and say, explain this to me, make it make sense. And that way, like you said, you have that active role in understanding the health of your business and what's going on. And you're not just working in the business, but
That's
you can
right.
work
Yeah.
on the business.
You're a member of that business
yes.
team. Yeah, you want to
Absolutely.
be a real member of that team as well.
Sure. Well, Schwanda, always just the most empowering and informative conversations. I really can't encourage everyone enough to go check out some of the other conversations that we've had, because they're very much like this, full of great information to just kind of empower you to be part of that team. So thank you again for
absolutely.
joining me.
Thank
Any
you for
final
having
thoughts
me.
you want to share?
No, that's great. Yeah,
Wonderful.
Just be sure to reach out. Anybody who has questions, reach out to somebody that you trust and start asking those questions. That's a really important message, and I'm just excited to be able to work in this industry and help veterinarians own. So yeah.
And remembering that there's people like Schwanda out there who are willing to help and able to answer all of these questions, and really, happy to help look at things to make veterinarians successful.
Yeah, absolutely.
Thank you so much to everyone who tuned in. Thank you to Dr. Flowers for joining me and for all of the great information, and to First Financial Bank for making this episode possible. If you enjoyed this episode, there are several more out there, so I highly encourage you to check them out. Also, one other note, if you did enjoy this episode, if you would go and leave us a 5-star review wherever you get your podcast, I am told that it will help other veterinary professionals find this great information too. For more episodes like this, click on the Education tab on the VetFolio website. As always, we'd love to hear your input on this talk, as well as ideas for topics you'd like to hear from us in the future. Feel free to reach out to me at dvm@vetfolio.com. You can also visit my Facebook page at Dr. Cassi DVM, and you can find me on LinkedIn. And remember, if one animal is better off because of you today, it's a great day. This presentation is based on changes to the SBA's lending programs made by the U.S. Small Business Administration in November 2023. SBA rules and regulations are subject to change. Visit sba.gov to stay up to date with the most recent changes. This presentation includes examples and does not guarantee identical outcomes. First Financial Bank does not guarantee loan approval, rates, or terms. Each situation must be evaluated separately.